We continue with double entry. So we're going to a ledger. When we're talking about a ledger, we're talking about collection of accounts of a business, the collection of accounts of a business. So we're talking about different transactions that has happened with the business. So it's first going to be posted in a journal. So from the journal, we start taking it. It's a book of original entry. So as soon as the transaction is done, you have the receipts, you have the invoices, you put them together, then you write them out on the journal before you transfer it into
Excel.
The ledger. That's where you collect them. You're going to have different transactions. So you have to put them together. The ones are for assets together, liabilities together, revenue together. This is what collection is about.
Yes.
Do you understand that? So a ledger account is divided into two halves. A ledger account is divided into two halves. Debit and credit.
Debit on the left and credit on the right.
Great. That's done. Then I have this transaction we have here. Look at these transactions. All these transactions, I'm going to explain them in one. We're going to start with motor car and cash account. They said this transaction was part of page 11. Yes, okay. Part of page 11.
Which question?
Yeah, so you have motor car and cash accounts. Motor car and cash account. These are two. I'm going to use these two first. Okay. In the debit side, motor car is being debited. So we have a debit entry of a motor car, and we have a credit entry of cash account. So the cash account is being used by the business for all its transactions. So through the cash account, the business paid for motor car, it pays for advertisement, it pays for wages.
Yes.
Do you understand? So because the business pays through the cash account for motor car, for advertising, for wages, so the assets of cash will continue to decrease.
Yes. And the asset, okay.
The asset of motor car would increase. Do you get the first point there? Yes. So the point is, as soon as the business pays, there's going to be double entry. The first entry will be for the motor car account, which is a debit entry. So you debit motor car account for the amount, which is 3,600, and you credit cash account for the amount 3,600. In this cash account, the money that goes into this cash account will be through the capital. So there would have been a capital recorded already. So that will be on the debit side of the cash account. So all the money spent now, all this money that the cash account is spending is on the debit side. So it's taking it from the debit side. Do you understand? So as soon as we have the capital account and the cash account, the capital account will be credited.
Money invested by the owner.
Yes, the capital account will be credited, and the cash account will be debited. I told you, when you have to increase your capital, you credit entry.
Yes.
And when you have to reduce your capital, you debit entry.
Yes.
Right? So with this cash account that we are looking at here, it would have meant that there's capital somewhere that has been credited to debit the cash account. So the cash account has been debited with certain amount of money, which we start spending. So as soon as we start spending, the cash account has received the money. Now, the cash account starts spending the money. So as soon as the cash account starts spending the money, the asset of cash starts reducing.
Okay.
So to reduce your asset, you have to credit. Do you understand?
Mm-hmm.
Any question about that?
Yeah, the second one, let me explain it. You explain.
Okay. So that's motor car account. So the cash account also has advertisement. Advertisement has been paid for. So the advertisement account will be debited, and the cash account will be credited for that amount. So for every entry done, cash is being used. So you credit cash for all payments, you debit each account for receiving such payments.
Okay.
Is it clear?
So you debit for every asset.
You debit the accounts which takes the money, which receives the money. Advertising accounts, motor car accounts, wages accounts, they are all going to be debited because they received money from cash.
Yes.
So the cash account is credited, and for double entry system, for every debit entry, there must be a corresponding credit entry. Do you get it or not? That's what I'm saying here. So motor car account, revenue account, advertising, wages are all going to have debit entry because they received money from cash. So for all these transactions, cash account will have a credit entry. You credit the giver, you debit the receiver. The receivers here are motor car, revenue, advertisement, motor car, advertisement, wages, trade receivables, and the rest. Do you understand? So all these transactions we are looking out here. Now look at trade receivable. Trade receivable is Mr. Brown. He receives goods, yes or no? So he receives the goods, it's going to be debited.
Yes.
Trade payable, the supplier that sells to us is a giver. It will be credited. Yes or no? So purchases will be on the credit side, sales will be on the debit side.
Okay.
I think it's clear. Is it clear, please?
Again, say again.
Purchases will be on the credit side because it will represent the supplier that sells to us. And we said you credit the giver. We purchased from our supplier.
Yes.
So we have to credit our supplier.
Yes.
We sold to our customer. We have to debit our customer.
Okay.
Sales is a debit entry. Purchases is a credit entry. Clear? Sales will have a debit entry. Purchases will have what? A credit entry. Is it clear? Good. So same goes to all these accounts. So look at computer and bank. Computer was bought, was purchased. Are you there? I'm going down now. Work the example. Page 13.
13, okay.
Computer was purchased. Bank through check. So the asset of bank has reduced because the bank paid. Then the asset of computer has increased because it received. Do you get it?
Okay, so I understand. No, for us to pay with the bank, it decreased because credit entry.
Yes.
And for the computer, our assets of computer has
Which
increased.
received. We now have the computer, right?
Oh, yes.
It is a debit or credit.
So you technically did not lose nothing because it's all underneath one.
In
asset.
accounting, you have to analyze.
You have to analyze.
What is accounting about?
3 things: recording, analyzing, and communication.
Communicating, yeah. So, yes, literally you lose nothing. But in accounting, it doesn't work that way. There's entity
Yeah.
and there's measurement. Do you understand?
Yeah.
So look at this. Now, they said the third account is capital account.
Yeah.
Computer office, are you there? They said the third account is the capital account of the business. It shows how the business was started with a capital investment of 5,000. So if 5,000 is a capital investment, it means
3 months.
no, forget about that. It's not about the 3 months. So our capital, now we receive capital of 5,000. So the capital account will have a credit balance, a credit entry
Of 5,000.
of 5,000. The bank account, because it was paid into the bank. So the bank account will have a debit entry of 5,000. So from the bank account now, we start making payments. And as soon as we start making payments, it's going to be made through the credit entry.
Yes.
Do you understand? So the credit side will be used for payment. The debit side will be used to receive the cash.
Okay.
So if the owner of the business put 5,000 into the bank account of the business, it means the capital account will be credited and the bank account will be debited.
Yes.
And as soon as we start making payments through the bank account, we're going to start having credit entries. Is it clear? So that's all about these things. So we go down to the activity.
Mr. I want to ask you a question. For like, you go to a bank
Okay.
and you said, I want to loan this, I want to put money in my account. So you credited money inside your account.
Okay.
You basically
That's a credit.
credit.
That's bank. Bank is different from accounts.
Okay.
In the bank, as soon as you make payment to your account, you have a credit alert.
Credit entry.
Credit alert, credit transaction, it's credit.
Okay.
But when you withdraw money from your account, it's a debit. That's why you have a debit card. Do you understand? Debit and credit in the bank. Debit in the bank means you are withdrawing your money. Credit in the bank means you are saving your money.
Yeah.
Clear? But in accounts, debit entry means you are receiving. Credit entry means you are paying.
Yes.
Is it clear?
Yeah.
So we have two ledgers here. We have subsidiary ledger and general ledger. Are you there?
Yeah.
Okay.
So we did it ledger account, yeah?
Yeah, we did. So we have subsidiary types of account. We have the subsidiary ledger and the general ledger.
We're now here.
Yeah. Are you with me?
Yeah.
So for the subsidiary ledger, we're talking about other ledgers like the trade receivable ledger, the purchases, the trade payables ledger. Because these ledgers are not part of the business. They are third party, so we call them subsidiary.
Mm-hmm.
Do you understand?
Yeah.
But the general ledger is the ledger for the account. The GL is the ledger for the business itself. The assets of the business is recorded, the liabilities of the business is recorded, the owner's equity is recorded, which is capital, the revenue of the business is recorded, and the expenses of the business are recorded in the general ledger. So the general ledger is divided into 5. Assets account, liabilities account, owner's equities account, revenue account, expenditure account or expenses account. That is the general ledger.
So it is split to 5.
Yeah, but for the subsidiary ledger, we have the trade receivables and the trade payables because they are third party.
Yes.
Do you understand? Trade receivables are our credit customers,
Yes.
and trade payables are our credit suppliers. They are third parties, but they are part of the business. So we use subsidiary account for them. Clear? A subsidiary account is the account that does not belong to the business. It's a third party account.
Okay.
Third party account like trade creditor and trade debtor. So a debtor is the credit customer. A creditor is the credit supplier. So the business that you buy from on credit is your trade payables. The customers you sold to on credit is your trade receivables.
Okay.
So they use subsidiary accounts for them. But your assets, your liabilities, your revenue, your expenses, your capital, they use general ledger. Is it clear? So that takes us to the activity.
Okay.
Are you there?
Cash sales.
Cash sales.
Okay, middle. Is a general ledger trade? I don't know nothing about this.
Cash sales. The business sold.
Because we just studied general ledger, we finished it so fast, so I don't know if we didn't.
General ledger is the ledger for the accounts. I just told you what is in the general ledger.
You told us 5 steps.
Revenue, liabilities, assets, owner's equity, expenses. All these are in the general ledger.
What does general ledger refer to meaning?
It's the collection of the business accounts.
Collection of it.
I wrote it for you. It's a means of keeping record of a company's total financial accounts. That's the general ledger. So cash sales. Cash sales represents what?
General.
Yeah, where are you going to put it? Is it general or trade receivable or trade payables?
General.
General. So what does cash sales represent?
Cash, you're selling stuff with.
Cash sales, what does it represent?
Selling stuff to people with cash.
Yeah, what does cash sales represent?
Yeah, sales.
What does it represent?
Selling products with.
I know, what does it represent?
It represents general ledger.
It's posted in the general ledger.
Yes.
What does it represent? Cash sales. Revenue.
Revenue. Okay.
You sold.
Yeah.
It comes to you. It represents revenue.
Okay.
Cash sales represents what?
Revenue.
So it is revenue, and it's going to be on the general ledger. Do you get it this way?
Yes.
Rent.
Okay.
What does rent represent? You make payments for rent. You paid rent. Is it going to be the general ledger or trade receivable or trade payables?
It's with the same account, so general ledger.
General ledger. So what does rent represent?
Rent.
Yes.
Income.
Rent. You paid rent.
Oh, you paid rent expense.
Expenses. Expenses, right?
Was a video.
Yes.